Guys, to another weekly webinar. First and foremost, thank you so much to every single person that has come out today. I really appreciate it. And so I'm really excited about this week, guys. A lot of interesting things are going about, and a lot of things are happening in the way that we anticipated to from what we said in last week's webinar. And so if you guys are new to the webinar and don't know how these webinar works, ideally what I do is I go through the $6 pairs top-down analysis, and I give you a breakdown from a longer time frame perspective as well as a shorter time frame perspective of where you could expect price to move from a duration of potentially 3 to 6 months, right, or potentially even longer, and as well as I give you indications of where price potentially move within the next 12 to 24 hours. And so with that, there is Q&A as well. And so if you do have any questions, I will answer all of them at the end. And so you can either write them in the chat room, or you can just write them down or hold them till later. And so any questions that you do have, please leave them till the end, and I will get to them. So with that, guys, just going to erase these annotations in which someone wanted to draw, which is all good. And so we'll get right into it. So with that, guys, let's get into it. Let's do it. So apologies, just don't beat me up on the dollar index analysis because there isn't much going on here, simply for the fact that I haven't really been looking at DXY as much, so I've just been looking at all the other pairs. And so don't beat me up on it too much, but we still are in very interesting areas. And so with that, guys, let's get right into it. On the monthly time frame, once again, is dollar going to tank now, or are we going to potentially see a small pullback and then see continuation from that, right? And so here we are, right? We did state that, you know, that key critical area where dollar needs to break is that 94.15 handle. And that's going to be the true indication of, okay, do we start to see, you know, continuations all the way back to the tops saying that this impulse is now invalid if we broke these highs, creating short-term higher highs, right? Or are we going to start seeing deceleration occur, rejection, et cetera, and then from there warrant this as relief for another continuation down? Now, one thing to take into consideration, guys, is that, you know, the momentum right now is still to the downside, which is why we have been stating that all of this bullish momentum, no matter what it looks like on the monthly time frame, is still treated as relief or correction. And so with that, guys, we do want to look at a couple of things just on the monthly time frame real quick before moving to the smaller time frames. We are in a pretty strong area when it comes to pending orders and rejections, simply for the fact that if you take a look at what happened to be, mid-2014 all the way into 2018, we can see that there was a tremendous amount of pending orders creating support and things of that nature. Now, at the start of 2018, we decided to crack through that. And so if you are part of my course, if you do know what the two types of retests are, you guys would know that this is a momentum retest followed by a structural retest as of right now, which simply could be, you know, price grabbing liquidity for further continuation in its direction, right? And so that's why we're treating all of this right now as relief. No matter if it did break that high, it did not break the high that warranted that initial bearish momentum, which had all of this bullish formation occurring from a support perspective. And so now we are going to treat this as relief until we do see a clear crack above that 94.15 handle. And so looking at it from the weekly time frame right now, guys, you know, last week was quite a pretty big indication that you could expect some type of pullback in this week, simply for the fact that you can see the last time we were at this area, right, the first candle that gave you an indication of potential reversal, you did see that following the next week continuation. Just going to take a second, guys, to take a sip of water. And so getting back into it, we're not shocked why we're seeing some type of pullback as of right now. One thing to take into consideration is that did have that impulse, did have that push, did have that impulse, and then that's where structure started this bullish momentum. Doesn't matter. This is still treated as relief because you are stating right here that this is one movement, hence this whole area here is just liquidation of that area. Bears are still in power. You are range bound, but treating all of this as short term until we do in fact see that big break above. And so pulling it to the daily time frame, which will give you guys clear indications of which way could expect a lot of pairs to move in the coming weeks, is as follows. As of right now, guys, a lot of people have been curious and they're confused on why euro, you know, CAD, etc. They're all moving in these aggressive ways. And let's talk about real quick just the distinction of a trend, right? It's not a straight line shot, but a consistence of highs and lows, right? And so you look at this right here. Even though we broke trend, we want to look at where ideally the last highs and lows of this ascending structure was. We can see that that was a base creating a low. This broke, creating a previous, broke a previous high, creating a higher high, now a higher low. So we're going to ideally state that the base that was created was right here, warranting that last low. And so a lot of people are confused and saying, well, why is euro, now dropping really hard, and why is USD CAD popping really hard? To be like, the lows never broke. So the laws of a trend, we should just continue in its current momentum. And I wouldn't even be surprised if that occurred, because this could be treated as relief. Hence, the two signals that we sent in the beginning of the week, USD CAD and Euro US dollar, both hit take profits, right? But we knew that they were short term and warranted as moderate risk, simply for the fact that we knew that structure didn't create lower lows to continue down to 92, the 92 handle. If we saw this, then we would say, yeah, let's start holding our positions. But that's why we're stating here that we're not going to be surprised if that occurs, because right now we are treating this as liquidation. You do want to factor in, though, guys, especially on the dollar index, that this is the only thing that really distinguishes the bulls versus the bears in the coming days to the coming weeks. We hold this area, you're going to continue back to the tops. We break below, right, expect a continuation pattern or a pullback due to liquidation, because probably someone pushed that quite hard. You get relief, profit taking, etc., and then run that back down all the way to the lows around 92, right? That's where pending orders will be sitting. And then from there, guys, you'll see a potential inverted head and shoulders pattern start to form, right? And this will be the neckline, head being on the top. But let's look at it, what you guys are here for the next 24 to 48 hours, and even to the next 72 hours, where dollar potentially could move. So let's take this away, guys, because it's not really that important. And what we're going to do is just mark the newest trend that is being formed, which we can see did just get previously broken. And so where are we potentially going to move as of right now? Well, this is the impulse. This is the last high of that small term relief, right, or liquidation. And we are, more importantly, range bound. So simply two ways. We make an impulse, which will tell us that market's momentum, which is descending right here, is continuing. And from there, we're going to expect some type of pullback or liquidation, which is due to profit taking of that initial impulse. And if that does fact break out, we're going to look to run that all the way back down to the 92 handle. And that will be for a good bit of time, right? And you can see that there is this head and shoulders pattern that is being formed and will be completed if you see, this entire area get broken. And you will see that 92 handle crack. Now, that will be your descending channel. One thing you have to factor in, and my students do know this, is that that is not continuation. That shows at some point this will reverse, because if this is the impulse we're going off of, and that starts to continue like that, this will form a reversal pattern. At some point, we will expect another pullback, right? But for now, that is ideally how you're looking for the sell. Sorry, guys. If that doesn't happen, and this just simply sits in the range, what we're going to expect first is we're going to expect a strong impulse to the upside, followed by a small pullback, small continuation pattern, and you guys can look to run that back up. Now, look, this is going to be warranted as short term. Why? This was, low that got broken was never tested. And so with that, this would be warranted as a momentum retest. This would be a structural retest. Hence, this entire bullish movement can be treated as short term, okay? Can be treated as liquidation because of this initial impulse, in which that could happen again to target back to the downside. So that is a potential trade right there. But this is a potential bullish opportunity to the upside. You just want to keep in mind that that is going to be warranted as short term or higher risk or moderate risk, at least, simply for the fact that you're looking left, you have previous pending orders there, right? Creating a strong area, potentially resistance. And from there, you do want to factor in that this initial impulse has been made. This would be treated as correction or relief. Now, if we make a strong enough impulse above, followed by a nice pullback, you could expect that big rally back up, but that would need some type of catalyst for it to do something like that. And so with that, failure to either, guys, will just warrant dollar index to sit in this range of consolidation. That is not something that we are interested in. And so if it just does range bound, most of you guys who do trade dollar index pairs would probably not have many trade setups to trade, simply for the fact that structure would be range bound. But if you guys do like to trade the exotics and things of that nature, potential trades can come about simply for the fact that they may not be as consolidated. And so looking at it from a euro US dollar perspective, same concept once again, right? If you guys take a look at it from the monthly time frame, and you guys should know that euro and dollar are quite correlated, and so we can see a couple of things occurring here, and euro gives a bit more of a clear picture in this sense. Notice here, this was right a very strong area of resistance for 3 years. We broke above, right, and one could warrant that we had a momentum retest here, we had a structural retest, and then we continued, right? And so now we look at it, we are pulling back. Some are stating this is simply just a structural retest, and we should continue back to the tops and potentially break above. Now, that's not necessarily valid as of right now, simply for the fact that you guys want to go on the basis of a trend. This trend broke out. More importantly, the last low of that trend broke. Now, we are at the base of this ascending trend before continuation down to the next low, zone trading, whatever you want to call it, right? And so looking at it as of right now, it's very tricky what EU can do. And just like I was stating before, it's all going to be dependent on how big of a push it makes within this 115, 116 handle. You see a strong enough impulse to the upside, it might state that this head and shoulders pattern that could form is now false. But if it doesn't, and if it starts to form a small pullback, small liquidation, right, then you could state that pattern is going to come into play. I'm going to try to run it back to the lows and potentially break the lows to continue down back to the 110, 109 handle, just speaking from a longer time frame perspective, okay? Now, one thing to factor in as well is we simply could get a small pullback. It wouldn't necessarily create a head and shoulders, but a structural retest back to the 122 handle, just creating a bigger term correction for another push down. The only way the buy would become about is if we start to crack above, again, that 122, 123 handle and target 128, 129. And so looking at it from a weekly time frame perspective, guys, you can definitely see that there were a lot of pending orders sitting here on the left, and so on the right here, we can see the same thing. And so structure did last week, just like on dollar, give a lot of signs that we could potentially expect some type of bullish momentum with that pin bar or bullish hammer forming, whatever you guys want to call it. And so now we are seeing somewhat of that bullish momentum. Once again, guys, it's all going to be dependent on how big of a push it makes. One thing to factor in here, and the difference between this movement here and this movement here, is two things, okay? When it made this impulse and it gapped out because of the French presidential election, this right here, that's all relief. And so this was just continuation, structural retest right here, momentum retest, shout out to my students, right? To see continuation in that movement, right? And so looking at it right here, if that trend was going to continue, this low wouldn't have gotten broken. And rather, this would have broken out and we would have saw continuation all the way back to the tops. But since we did break that low, now the game becomes, where are we going to move and how do we gauge this pullback, right? Because if structure doesn't make a strong enough push and it just starts to, make a slow, decelerated bullish movement, we're going to get this drop. Now, I don't know if we're going to break these lows, but you'll get one more drop, which is why I'm stating be quite careful on how this pulls back, okay? So looking at it from the daily time frame, there's a lot that's going on here, right? Let's mark a couple of things real quick. This was the area that was acting as very, very, very strong dynamic support. Once we broke momentum retest, we dropped really hard. It's understandable. When you're holding an area or a base for 3-4 months and you crack it, you're going to drop. And so that impulse now becomes invalid. And so now we look at it and it's okay. What are we in? What's the environment? Well, let's mark a couple of things real quick. One, that's the first high of this downtrend. The second high of that downtrend becomes here. So you have two areas for bullish movement, but still treated as short term, right? And so looking at it right now, what did we receive first? We saw an impulse, we saw relief, saw another continuation of that impulse, and now we're treating this as a liquidation phase, a area of relief, profit taking, and things of that nature. And there's really two ways that this goes about. We either see a strong impulse to the upside, creating short-term higher highs. From there, we're going to expect a small pullback. If it breaks out, creating short-term high, small-term pullback, we could run that back to the upside, back to the 119.78 handle. If you guys aren't aware, this would be treated as still correctional relief for a potential another downside push. Simply for the fact that you have to factor in this is the first push. It's the entire movement. This is treated as liquidation, as profit taking. Now, if that doesn't happen, right, and we don't crack down, we could potentially start to break back to the downside, in which that low would need to be broken, followed by a potential continuation pattern, and you could look to run that back down to the daily support and even break it. You can see, and it's very, very crystal clear, guys, that EU's behavior is an impulse, which actually becomes your 1 if you're aware from my course. 2 is your pullback or your relief. 3 is your continuation back down to your 1, and your goal is to break that low. So once again, if this is going to be our 1, that's going to be our 2, and this is going to be our 3. Back to the 1, our goal is going to break that low, potentially even target lower. Now, looking at it from the smaller time frame perspective, which is what you guys want to see, is as of right now, guys, EU is not giving many signs. It's just showing that it's very decelerated, and we want to look out from a longer time frame perspective and see what we can get. Okay, so first and foremost, we have this previous high / low that's definitely showing a lot of potential orders and potential selling areas. Then we have this high as well, and then we have the one that we're currently at. How do we move within this? Okay. So right here, we can see that there's a lot of potential pending orders. If we break out, creating short-term higher highs, we pull back, you could potentially take that back to here. Now, once again, still treated as short-term and relief because of that initial impulse, hence liquidation, could expect another push to the downside. But if that doesn't happen and still continues to break out, you could potentially look for another pullback, size in, whatever you want, and rally back to the upside. This is the key critical area. Why are we stating that? Because you have to look at the two trends that were formed. That was the first one. This was the impulse. I mean, the pullback, the relief. It's the second trend that formed. Hence, if you invalidate one, you will move to the next. Simplistic trend, just looking at trends. And so the only way that this would become a big buy is if and only if we made a strong enough impulse to the upside, followed by continuation. And then from there, you could start to rally that all the way back up. But if it doesn't do something like that, you want to be quite careful in that area, simply for the fact that you guys want to look left and you want to say, well, where am I in the environment? This breaks out. If it doesn't make a strong enough impulse, you're going to be like, well, why did it stop, right? And I'm going to argue and say, well, just look left. You guys be like, oh, hello. There's a lot of orders sitting there, right? And so you want to be quite careful. Any bullish movements you can take, they're going to be treated as short term. They're going to be treated as low risk or moderate risk. And you want to look at it like this, guys. If the roller coaster is just starting right here, where are you in the roller coaster? And as you get higher in the roller coaster, how does the risk increase? So if we flag out again, where are you in the roller coaster now? The risk increases as you get higher, right? And then if it flags out again, you just keep looking at where you are in the roller coaster. The risk just keeps increasing. Now, from a sell perspective, I know I'm going on EU, is if we break the lows, you're going to want to see a strong impulse followed by a pullback, and your goal is just to run that back down. You probably don't want to try anymore, simply for the fact that you did see here in the past, if you look at the monthly sitting over here, that we did falsely break, right? And so could expect another strong pushback to the upside, creating a double bottom pattern, and then from there potentially warranting that rally back to the upside. Now, it's not to say that that can't break and continue to the downside, but like I said, you would ideally want to see a daily or weekly close below that area to see any continuation. USD CAD, a pair, once again, that has been faking out a lot of people, right? And everyone's confused on what's going on. You guys can't be confused when you guys look at the charts and see that there's a tremendous amount of pending orders sitting at an X given area, right? And you look at USD CAD, I always go over this just to start off, guys. I go off with the behavior. And you guys can see here that USD CAD behavior starts out like this, okay? Let me give you a more zoomed out view. Start with an impulse, start with a pullback. You'll see a continuation of that impulse, and then you'll see another phase of liquidation. And so what we're looking for right now is for structure to start breaking out so we could tag that the ascending trend again, and hopefully get that push all the way back down and get another one of these. But if you guys just take a look at it from a mere level perspective, and first we're going to look at it from the monthly. This is your monthly resistance, okay? The art of technical analysis states that past predicts future. And if that's the case, then in the past, we have seen rejections occur here, 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 and once again now. Two reasons why that's happening. One, this was a very, very strong area of support. You look left again, very strong area. These two candles are warranted as false breaks. So once the bears took over, the bears are fighting their tails off to gain control because the bulls own that area for a very long time. So if you're trying to trade USD CAD and you're getting stopped out or wicked out, you can't be upset because you're fighting in a territory that is a battle between the bulls and the bears. And so if that's the case, you guys have to factor in that, you know what? If I'm getting stopped out, it's because I'm in a very tight area. I'm in an area that has a lot of wickets. There's a lot of pending orders. And so looking at it, we're right now creating a lot of deceleration at this area. You guys can see here that there was a lot of false breaks. One, and we're going to get another one right here, right? If you guys know from the candlestick course or the candlestick section, this is the impulse. We're seeing deceleration and exhaustion. Once we break the lows and create lower lows, you're going to see a big drop back down. And hopefully we get that big push like we saw here. That's the goal. That would come in line with exactly what's forming on with the behavior right now of USD CAD. Now, this might become a little complex once we break out of here, because if you guys don't solidify an entry within here and you try to take one down here, it might become a bit tougher, because if you guys look left, 1, 2, false, false, right? Might be battling a bit more. Once again, my theory on the roller coaster, if you're going to start dropping on that roller coaster, you enter here, lower risk. As you start to continue down on the roller coaster, the risk starts to increase as someone's got to liquidate at some point, hence causing for a pullback or for trend continuation. And so looking at it from a daily time frame right now, you guys can see that CAD's in a very funky area, okay? And I'm going to take the trends drawn on the 4-hour time frame. We'll review that for a second. But once again, it's just a very clean-cut example here if you're looking at it from the daily perspective. I know a lot of people are trying to take this on the smaller time frame. Just wait for a strong impulse above the monthly, wait for a small pullback, and then from there you can look to target that all the way back to 133.46. Now, if that doesn't happen, guys, then all you want to simply do is wait for a strong break below that 128.76, wait for a pullback, and then start to look to run that all the way down to the ascending trend, right? Simply for the fact that right now this is range bound. And you guys can understand that. Just look at all of that. If you guys are not aware why USD CAD has been having such a tough time, is if you guys have been following up on CAD economics, you guys know that the Bank of Canada, they want their currency much, much, much stronger. And so they're looking to get it to parity at some point, but right now they're looking at the 119, 121 handle. If that's the case, and there's that much bearish pressure, and they keep raising rates, et cetera, on USD CAD, bullish pressure on CAD, and dollar starts rallying, which it has been, that's going to cause some extreme consolidation. And so you look at dollar, and dollar's been chugging along for the past couple of weeks. That's why we're seeing all of this, because the bears, they want to go. They want to go. But they can't if the whole market is moving in the other direction. And so looking at it from a smaller time frame, guys, this was a trade setup that you could have taken. Shout out to you guys, whoever took it out of the signals. I was looking through some of the messages today, and you guys took that. I don't know if I had the trend. No, I did not have the trend like that. That's right. I had it like this. My bad, guys. Okay. So looking at USD CAD as of right now, we can see that this was the initial impulse made to the downside, and this is all the relief that we are sitting in as of right now. And within that, you can see a smaller term impulse. We're going to warrant that all as relief, liquidation. We did signal a short-term sell here. It did hit take profit 1, right? The reason why we did signal it to there is simply for the fact that the initial impulse occurred there. Hence, if this trend was going to continue and this was going to be treated as relief, that's why we were only taking it down to there. And we were not surprised if CAD was going to move to the upside. So looking at it from a more zoomed in perspective, we can see right now that CAD is majorly wicking off that descending trend, monthly resistance and things like that. So if we take it and we move this trend now, we can see that this is somewhat of the trend being formed. And so one way this is going to occur as of right now, we can see that this is the base being formed. What we're going to want to see a strong impulse pullback. You guys can start to take it below there, but this is going to be very short term. You want to see that broken again. You want to see below weekly support. That's your ultimate goal. This is a very tricky trade. And so looking at CAD as of right now, I wouldn't be interested in trading that if I were you guys. I would wait for clear signs above or below this area. And if you guys don't have clear signs within that, you guys are going to be battling, because this could rally from here and then pull off and then drop and then start to rally, right? You don't want to deal with all of that. It's not something that you should be interested in. Next is USD yen. And looking at yen, yen's moving how we expected. But as of right now, a bit of some bullish movements, only because of the fact that dollar is starting to gain some bullish pressure, only because it never created lower lows. But just like I go over every single other webinar, this was the impulse that occurred, and then from there, failed impulse from this. Therefore, this became the impulse. And so I want you to look at this, though, guys. We're in an impulse within an impulse, and so this was our current impulse. We're treating all of this as liquidation, right, or relief. And at some point, we're going to expect that to flag out and tag the tops. But this is ideally when we expect it. When this was legging up and this was creating the base, that was the flag we were in which we were expecting a rally back up. Since that didn't happen and this broke the low start of 2018, that impulse now becomes invalid. So this becomes impulse. This becomes treated as relief. Once we break, we're targeting the lows, right? And then once that occurs, we're going to look for that to start kicking in again. We're going to expect that to decelerate and a strong enough pop up, a pullback, and then we're going to look to target the tops once again. And so that's what we're playing in as of right now. That's your base and that's your high over here. And so it's a bit interesting just looking at it like that, because you got a bigger bullish impulse with a smaller bearish impulse as of right now. And so like we said, guys, this was being treated as correctional relief for another continuation down, and that was being stated for like 3 weeks. And so hopefully you guys were aware of that. But looking at US dollar, Japanese yen as of right now, we can see that this was the major low that was broken. We do have a momentum retest here, hence this is being warranted as the structural retest. Now we do see a strong impulse here, treating this as liquidation, but one thing to factor in once again is that you're going to want to see that low broken for any serious bearish momentum to the downside. If that low doesn't break, you're still warranting that as your momentum. This is your relief, and so you're dabbling within this little area here. I don't know if you guys are interested in that, but some point that will form a reversal pattern. You're going to expect that drop, unless I could be completely wrong and it says nope, let's start cracking to the upside. That's your key level, right? Because so ideally the last high that you're going to have to factor in, you had first one here, then you had kind of that one there, and this is your ultimate one. You crack that, you should go back to the 118s, but treating that as relief right now. So let's see what we can do on the daily time frame. Potential head and shoulders pattern being formed, 1 2 3, neckline being there. Even though we did break out of this trend, guys, just like my students know, in the end of the day, trend is not a straight line shot, but a consistence of highs and lows. Don't ever forget that, okay? It's not a straight line shot, a consistence of highs and lows. If anyone tells you otherwise, oh no, they're smoking something. But so as of right now, looking at it, notice this, guys, a couple things that you want to see. Right, we were stating that this was the potential area to become a structural retest, our 2. This becomes our 1, which is our momentum retest, short-term movement. If this starts to confirm, we're going to expect that to break the low. That will warrant trend continuation. But even though we do see this head and shoulders pattern being formed, you want to look at this. This was the high that we broke. We should create a strong impulse. I know I have the fibs here, guys, but look, that was the monthly resistance, okay? Then we rejected, create a structural retest, gathered all those pending orders, etc., and then we dropped. So what does that mean about this impulse? It now becomes invalid. And so now we look at it and says, hello, this is warranting liquidation relief. And so looking at it, yes, we are creating a head and shoulders pattern. No, we have not created higher highs yet. Actually, we did now. Look at me saying no. We even broke and retested the high. Damn, that could potentially, guys, look at that, be live. That could potentially invalidate that impulse, right? And you do have a small term inverted head and shoulders with that neckline being completed. Look at that. 2 patterns within one. Now, look, if it doesn't break the head and just comes back to here, that's still treated as correctional relief. It's still a head and shoulders pattern. You're just going to look for that to break out, small pullback, and you're looking to run that back to the lows and hopefully breaking that neckline to get that big drop down. But as of right now, it actually looks like yen should appreciate to the upside. I mean, not yen, dollar should appreciate to the upside, which means yen should depreciate. And so looking at it, that's our impulse. This is our relief. It doesn't matter how high we go on this relief. I can't draw a straight line. As long as no matter how high we go on this relief, it doesn't matter because we're ultimately expecting yen to come back to this previous low, creating a structural retest, and then potentially expecting further continuation back to the downside. Hence why all of these bullish movements treat as short term. If you guys are confused on what initiated that buy, it was the break of this previous consolidation, creating short term higher highs. We pulled back, small liquidation, saw continuation. I missed that trade for you guys last night. I popped on my charts. I went through the 1 hour, and there was already 2 candles that already moved too much to the upside. And so, unfortunately, I wasn't able to signal it, but that was a pretty good trade if anybody did get into that. And so looking at it, guys, you're really in a two-way span. You're in this range right here. Oh, I think we called that. Yeah, we called that in the setup. So cool. I just noticed that now. Yeah, we said that this was going to be a false break, which we did expect. Why? Because just look left. See that? See what you're dealing with? You got pending orders, pending orders, pending orders. And so looking at it, 2 ways. Just like I had to give everything. We're in a range, so just make it simple. Come on, Albert, draw straight lines. Okay. So we get an impulse. We're going to expect a relief, pullback, run it to the monthly. Short term again, because you're stating that's a structural retest of that, which means this is all liquidation potentially for another downside play if we created lower lows. Look, it could continue and rally up, but the moment you create lower lows, you're going to drop. But if it continues to keep rallying up, yeah, I'm completely wrong. And so if that doesn't happen, you want to see that impulse, small liquidation pullback, and then start dropping it all the way back down to the weekly support. Check left, a lot of pending orders here. Yeah, you guys can see the screen. Sorry about that. Girlfriend was calling. Had to let her know we're doing the webinar right now. And so the sell would be, guys, if we did, in fact, break that low with a strong enough impulse. And then from there, we'd want to see a nice continuation or pullback, creating a continuation pattern. And then from there, if we do, in fact, break out of that trend, creating lower lows, could expect all the way down. Now, failure to do either, guys, would just warrant consolidation within this. That's not something you're interested in. One thing to factor in and look at real quick. Inverted head and shoulders pattern. But we are having false breaks. So what does that mean? Tough to say right now, only because it just tells me that the buyers couldn't gain anymore. It makes sense. There's a lot of, bullish movements that were occurring there. Once we broke out here, it becomes the bears game. So makes sense why that happened. And so you just really want to wait for 2 ways. Now, just this is something funny to look at, guys. You got an inverted head and shoulders, right? And within that inverted head and shoulders, you have a head and shoulders pattern, right? So you have 2 within 1. You also have these flags. This can be treated as relief. That's lower lows. That's higher highs. One way or the other, done and done. On to the next. Let's do it. Pound dollar. We did say that we are going to get the pullback, right? If you guys are not aware why, that's a lot of selling. A lot of selling. And so someone needs to liquidate after that movement. Someone needs to take profits. And so don't be surprised if that's pulling back or if that's relieving. It's just profit taking. Now, you're expecting potential pullback to that 137.56 because that would be warranted as a structural retest. And then that would create relief, start creating a lower high, and that's your push all the way back down to the base and potentially even lower because we did, in fact, break out of that and create lower lows right there. Now, if you're not familiar with pound economics, take a look real quick. So, starts with an impulse. Then we start with a relief, liquidation, etc. And then you'll receive another impulse, you'll receive another liquidation, another relief, and we just created lower lows. I would not be surprised if this just drops. I'm not saying it's going to, but every time that we broke out of a structure within pound, we would just see continuous drops. And I'm going to show you something on the daily time frame, guys, that I think is quite interesting in reference to pound. That it took something like 52 days to get all the way to the upside, to like 13 days to correct the whole thing. So that was quite nuts. But looking at it from the weekly time frame, once again, weekly candle gave you indication, potential bullish momentum, mere indications on confirmations, guys. We did break the lows, creating lower lows, treating this as liquidation, pullback relief, and things like that. So with that, any bullish movements to the upside, treat as short term. Moderate risk, right, or higher risk, keep that in mind. That's bad drawing. Also, potential head and shoulders pattern to come out, creates a structural retest, creates a liquidation flag, etc. That'll be your left, that'll be your head, that'll be your right. This will be your neckline. We could break out, run it back to the neckline, and hopefully break to the monthly support. Pulling it to the daily time frame. Oh, that's AU, not yet. We can see here that this at some point was going to pull back. Notice, impulse, continuation relief, impulse, continuation relief, impulse, but that's forming a reversal pattern. It's not showing a continuation pattern. And so with that, once we saw this be tapped, you look left and you can see that this looks like that we had a tremendous amount of bearish and bullish pending orders. And so looking at it as of right here, we can expect to see some bullish movements occur within this. Now, once again, guys, treating this as relief, we are only expecting pound to come back to here as of right now. So potentially some rejections and things like that, but can be treated as a inverted head and shoulders pattern, this being the neckline as well. But just be aware that you could expect some type of deceleration within here. Now, if you guys could be the patient people that I wish you guys would be, all of you, and just simply wait for that, or just wait for that, I promise you, you wouldn't lose on this trade. But what people try to do in the end of the day is that they try to trade within this. And one, you're trying to fight the bears because they had so many bullish pending orders in which they broke, which became theirs. And two, this is one movement that's got to liquidate at some point. And so you're going to be dealing with a lot of factors in there. Liquidation, you're going to be dealing with pending orders. It's going to incur consolidation, and then you're going to need a catalyst that tells you what's going to happen. So looking at it from the smaller time frame, guys, right, we did state all bullish momentums are going to be treated as short term, moderate to higher risk. And so as of right now, you just want to look at this one area that could be potentially structurally retested. And so we did get the momentum retest right here. And so if we do come back, create a lower high on that descending trend, potential structural retest, treating this entire movement as relief for a potential another downside play. But looking at it as of right now, what could happen? We are breaking these highs. You can see a lot of rejection occurring within there. I wouldn't be surprised if we tag falsely break and start to drop. That's a possibility. Notice, though, it will create a reversal pattern, not a continuation pattern. Your only buy is if you saw a strong impulse up, look for a type of continuation, pull back, and then from there start to run that back to the weekly, okay? Be careful, though, once again, because this is your key level that's going to warrant the buy or sell. And so this entire movement would still be treated as relief or liquidation, just because you have to look at pound in its entirety, and this has sold off quite a bit. And so like I said, you have two trends. You have one, then it caps off here, then you have the second one here. So like I said, even though if it pulls back all the way to here, treat it as relief for another downside, unless you crack that, then you can say, yeah, we're going back to the tops. But that is the way the pound dollar would look out. Bringing it to AU and NU to make it the last ones, guys. Not the minute time frame, the monthly to start off. Okay, so what did we say, guys? The trend's not a straight line shot, but a consistence of what? Highs and lows, right? And so what were we saying on the monthly time frame? Even though we broke below the monthly support, if you look at it, guys, then we're going to look at it a little bit. We didn't create lower lows on the weekly. So looking at it, that was the impulse. We are in a state of liquidation. Don't get me wrong. And you are going to expect that at some point. That is your goal. But till then, got to play it by the levels. Got to play it by where the lows represent 1 and 2. And so looking at it from the monthly time frame, last month did give some clear signs that we are not going to create lower lows just yet. We did break that, right? Did break here, but this showed a lot. Told us that, you know what? We tried to break, but not this month. And so looking at it from a weekly time frame, I want you guys to see here that we never created lower lows. This gave a lot of indication that we're going to start pulling off. You can see every time it started its rally, it will decelerate quite extensively. And more importantly, notice something very important. See, I'm about to show you guys something here. All stay with me for a second, because I'm about to show you guys something here that is, if you guys took behavioral analysis, you guys would know. But notice this. It takes AUD USD exactly 4 candles before it rallies, 4 months. 1, 2, 3. This is 5. We're going to count 4. This will be 5. Let's say if we started from the low, 1, 2, 3, 4. If we started from the low, this 1, 2, 3, 4 rally. We start from the low, 1, 2, 3, 4. If we get the rally, that'll be ridiculous. That'll be absurd. Feel me? Because that's the low. Now I'm going to count that as 1, 2, 3, 4. If we go, that'll be 1, 2 from the low. 1, 2, 3, 4. Go. I'm not going to count that because this is the low. 1, 2, 3, 4. If we go, that'll be 6. So that'd be cool. Something just to factor in, right? Isn't that cool to look at the end of the day that you can see it took about 4 months before the takeoff? And so we'll see. We'll see what's going to go on. But you're treating all the bullish movements right now short-term or liquidation simply for the fact that you don't know when you're going to expect another downside play because of all of this selling. And on top of that, you look at it from a longer time frame perspective. This is all relief, whether you want to draw it like that. This is just still all relief from that initial selling point. And so pulling it to the daily time frame as of right now. Solid rejections right here on that descending trend line. Tough to say where we're going to move because we are creating a small pullback to that previous high that was broken, creating a potential higher low. We are on the smaller term trend. Remember, this is still treated as liquidation because of that initial impulse. This is the real high to crack if you want to see serious bullish pushes to the upside, to the back to the tops, right? And so if it doesn't do that and it breaks out of this trend, you're going to expect a pullback and you could look to rally that back up. Once again, treat it as relief. You got to look at this. You got to look at how the trends form. That's one, that's the high. And it continued to make lower highs each time. And so those are your areas that you're looking to run. You just want to look at when you're switching momentum, what do I need to factor in? What do I need to keep in mind? And now, if the bullish momentum doesn't happen, first you're going to want to see a false break of this area. So you're going to want to see a big push down. Then from there, you're going to want some type of pullback, and you're going to look to run that back down to this trend. And if that trend does break plus this low, your goal is to run that all the way back down and potentially even break for that big push. Because if we do start to reject again the monthly resistance, and this is a false break, you're going to expect a big push back to the downside. And so looking at it from a 4-hour time frame perspective, we can see here, guys, that AU right now looks like it's in a state of liquidation for further continuation to the upside, right? Even though we are in that impulse, and this is all the relief as of right now. I want you guys to look in here. We do receive an impulse, we see a relief, see another impulse, and we're in another relief. Now, what did I state? Any bullish movements are going to be short-term or higher risk. Remember, this is more of an impulsive channel within the liquidation phase. And so, like I said, you want to be quite careful on how this breaks out. Be careful of that previous area as well as these tops, because that's where a lot of bullish pending orders are. Potential bearish pending orders are going to be sitting within the same region. And so ideally, the bullish movements are going to be treated as short-term or higher risk, right? And any bearish movements are going to be based on, okay, do we break out of this trend? And if we do, you know, when can we start to look for a sell? And like I said, first you want to see a false break on that. And from there, you want to try to sell in a continuation pattern. It's a higher risk exposed trade, but you could try to run it within here, but you're just playing within short-term trends. And then this is your real base. Why am I stating that? Look at all the false breaks to the left and to the right. And so you really want to start cracking below that. Any pullback, you can start running that back to the downside. Failure to do either, guys, will just warrant consolidation within this. That's not something you're interested in. So ideally for me, I would wait for a big buy up pull back, and go. Or I wouldn't try to trade in something like this. It's too short term, but you could initiate this. This is higher probability only because you're still going with the entire momentum, stating that this is all false breaks. And that is something that you can factor in. But if it doesn't happen, then it's just going to stay in consolidation. Last but not least, guys, is NZD USD. Let's look for the monthly time frame just to get started. Once again, just like AU and a lot of the other commodity pairs, this is just correctional relief. We can see capped out at that 76.14 handle. And so more importantly, we are range bound, but within the relief, right? Yes, this is relief. And I mean, yes, that's the impulse. And yes, this is relief, but you have to look at it in a more minuscule perspective and state that's the impulse there. This is treated as liquidation, potentially for another big bullish run to the upside if we crack that high. But until then, bears still own the game. And reason being why this is so tough is I just want you to look left, see all the bullish pending orders sitting here. It makes sense why the bears now own that area. And so looking at it from the weekly time frame, you guys can see that we're simply range bound, bouncing from the lows to the highs. And so looking at it from current momentum, that is the impulse. This is the relief that we are in as of right now. Potential structural retest back to the previous low that it broke. And then from there, potentially flagging all the way down to back to the lows. Once again, you do want to be sticking within the lows. The buy is only going to be warranted as if you break above a descending trend line, small pullback. It's a tight play back to the tops, and then you can try to run it back above in the false breaks area back to the monthly. Tight ranges, you want to just be looking for sells for now. And so looking at it, though, you can see a potential inverted head and shoulders pattern being formed with the left being here, the head being here, and the right being there. Now, on top of that, that would be the neckline of inverted. If we crack above, small pullback, that is your rally back to this previous low, and then potentially creating a lower high on this descending trend line if I can get that wick, something like that. And so and once again, if that does happen, you're going to treat this whole movement as correctional relief just for a potential continuation back down because of that initial impulse. The only buy would be a strong impulse up, pull back, and back to the upside. You can take these buys just stating that they're short term. It's not incorrect to take those buys. You can take those trades. Now, if that doesn't happen, right, you're going to be treating this as relief. Once you falsely break that previous high that's acting as a higher low now, you could look for a potential sell entry within there, run it back to the base, and hopefully run it back to the downside, only because this would be a 1, 2, 3 pattern then. And so you're looking for the 3 to run it back down to the 1. Now, looking at it from a 4-hour time frame perspective, we can kudos to you. I'm not. I like to swing my trades and not really care about them, and not in that sense, but I mean like not have to really think about them, because if they're range bound, that's something that's just very tedious and meticulous to deal with. And so looking at it, that is our range. This is our previous high we just broke. Momentum retest, structural, creating flags. That's the behavior of this channel. If we break out, you want another flag. Notice the behavior. And so if that breaks out, that is your go-to to the upside. Treat it as correctional relief, because you want to look left and say we could get a structural retest of that previous low that we did break, right? Now, that doesn't happen. The sell could be initiated once you break that previous low that it did break, falsely breaking this high. From there, a small pullback, and then you could expect continuation all the way down to the base, and even, like I said, the monthly support. Failure to do either will just warrant consolidation, and that might not be something you're interested in. One thing to factor in is that there is a potential head and shoulders pattern to come into play, in which if that does happen, this is how the formation would come about. This would be your descending channel. Now, with that, guys, that is the breakdown of all the dollar pairs from a longer time frame perspective to a shorter time frame perspective. And so what I'm going to do now is I'm going to take a big sip of water, and then I'm going to break down the pairs one more time for the next 24 to 72 hours in a much quicker manner, just so that we can get also those key highlights out for everyone else that is looking for the key highlights. So, all right, guys. So I'll start on the oh no, not QD. Okay, I'll start on the daily. Is that the daily? That is the daily. Cool. All right, guys. So let's get right into it. What I'm going to be doing is I'm going to be breaking down the next $6 index pairs for the next 24 to 72 hours to give us indications and outlooks of where price could potentially move, as well as factoring in potential risk exposed environments from the bullish and bearish stance. So with that, let's get right into it. One thing to factor in on the monthly time frame is that we are pulling off of that 115, 116 handle, which makes complete sense because that was a 3-year resistance, which is now acting as strong dynamic support. One thing to factor in that we did state is last week did give key indications of that potential bullish movements for this week. And so with that, we do want to be quite careful on how big of a push it's going to be making from that from this previous base. And so looking at it from a daily time frame as of right now, we can see that structure is potentially going to create higher highs if it does in fact break above that 117.50 handle. One thing to factor in is that there are two trends within here. You have that first one being that descending, then from there you do have that second one due to that was the relief capping off that trend, and now we are in the second phase. Hence, if we do in fact break this high, creating short-term higher highs plus a small term pullback, we could expect one rally back to that previous high / lower high that descending form did fact. And then from there, this would be treated as correctional relief, in which if we did break out, we could expect a rally all the way back to the downside. Or if we did break back above, we could expect another bullish rally to that 122 to 123 handle, creating a structural retest or potentially even rallying all the way back to that descending trend line. But looking at it from a 4-hour time frame perspective, we can see right now that we are in just a state of relief. And so it's very simplistic on two ways that we're going to go about. Two things that you do want to mark real quick is that you do have this previous zone sitting here, as well as you do have this previous high sitting here that is holding that first initial impulse down. And then from there, you do have this last high with the rejections. And so I'm going to take that away just for clarity. And so right now, if we do break above, we could expect a small pullback, and then from there you could expect a rally back into this previous zone. Now, if we do start to continue to the upside, we're going to expect an impulse up, from there a pullback, and then from there we could expect continuation all the way back to the 120 handle. Once again, guys, you would be treating this as correctional relief or liquidation, simply for the fact that this was the initial impulse of the downside, in which if this does start to break, creating lower lows plus a small pullback, we could expect continuation all the way back down to the monthly support. Now, if that doesn't happen and it doesn't break out, we do in fact want to see that being capped. We're going to want to see a strong impulse below the monthly support, the 116.62, a nice pullback, and then from there we could expect a drop all the way back down to the daily support, the 115.10, creating this a 1-2-3 pattern, the 1 being the impulse, the 2 being the relief, and that 3 being continuation, with hopefully breaking that low and seeing continuation down below the 115 handle. Failure to do either will just warrant consolidation. That is not something you are interested in. Please keep in mind that the big bullish plays will not be seen until you do in fact break that 120 handle, followed by a strong pullback, and then from there you could expect one more rally above. Failure to do either will just warrant consolidation. Bringing it to the next pair, USD CAD. On the monthly time frame, you do want to factor in a couple of things real quick. This is its behavior to start off with an impulse, followed by a relief or liquidation with another impulse, and then now we are in that liquidation phase as of right now. So looking at it from the weekly time frame, it is quite expected why we are seeing all of those rejections at that 128 to 130 handle, simply for the fact that you can see when that low did break, the bulls did in fact hold that for quite some time, in which the bears now took over. You can see in the past that there were a lot of rejections and a lot of false breaks, in which we can see now that structure is in fact doing the same thing that it did in the past. One thing to factor in is that CAD economics do want further appreciation on their currency, but since the rise in dollar occurred in the past coming weeks, that did cause a lot of consolidation within the pair. Now, looking at it right now, we are in a very complex place in the smaller time frame, but looking at it from a daily perspective, there's really two simple ways. You either break the lows here with a strong enough impulse, followed by a nice pullback, and you might get continuation back down to that ascending trend line that's being found on the weekly, and your goal is to hopefully break through that and target all the way below the monthly support, simply for the fact that that is the behavior of the longer time frames. Now, failure to do that potentially could warrant a strong enough impulse above the monthly resistance, followed by some type of pullback or liquidation, or further continuation back to the weekly resistance. Now, that is a very simplistic approach, simply for the fact that we are warranting this as range bound as of right now in USD CAD, in which it's either going to see continuation of that impulse, or we're going to treat this impulse and this ascending movement as liquidation for another continuation back to the downside. Now, in the smaller time frames, it does become a bit more complex, guys, simply for the fact that you can see that we do have a short-term ascending trend within this entire liquidation phase, right? And so looking at it, it's not ideal if you want to be taking trades below this low, because it is going to be warranted short term or higher risk because the momentum is ascending. And so ideally you want to see breaks below that lows for any type of trades back to the downside. You want to see a strong impulse followed by a pullback. And then from there, you could expect continuation back down. Now, if you don't get that, and this simply just stays like this, if this breaks to the upside on the highs, look for a small pullback, and then from there, you could ride that back up. Just remember, you are dealing with monthly resistance in which false breaks can come about. Clear signs, guys, are below the weekly support and above the monthly resistance. Failure to do either will just warrant the same continuous behavior, which is whipsaw, stop hunts, and things of that nature. Looking at a UJ on the monthly time frame, we can see that we are seeing short-term bullish momentum occurring, but we are warranting this entire movement as a structural retest, and this impulse is invalid after this impulse was occurred until the beginning of 2018, in which this small-term ascending movement is treated as liquidation. Looking at it from the weekly time frame, guys, we can see that that was the initial impulse that was made, breaking these lows in 2018, treating this short-term ascending movement as liquidation or profit taking. One thing to mark is that this is the last low of this ascending movement, in which if we do crack strong enough followed by a continuation pattern, we could see potential continuations back down to the monthly support, the 105.50. Now, the only buy would be warranted if we broke above the 111.22, in which it would be short term to the 113 and 114. Now, pulling it to the daily time frame, guys, you do want to look at a couple of things. We do have an impulse here. We do have this relief that broke out, structural retest of that previous bullish support or dynamic support, in which now notice what we have here. We do have a false break of the monthly resistance, seeing right there, and B, we do have this impulse warranting this as liquidation or relief, in which if we do break out, creating short-term lower lows, from there we could expect continuations back to the low, creating a potential head and shoulders pattern, which you can see the left there, the head here, the right here, and this being the neckline. If you do see a small crack, a big enough crack below the neckline, followed by a small term pullback, you could expect continuations all the way down to the monthly support. Now, failure to do either, you would need to see a break above here. From there, a small retest, and you could expect continuations back to the upside around that 111.24. One thing to factor in real quick on UJ is that it did break and retest right now on the daily time frame, in which we could see a completion of this inverted head and shoulders pattern if this does in fact break out, in which if it does do that, we should see continuations back to the upside. Now, if it does get capped out here, creating another false break, you want to see that low get broken. From there, a small continuation pattern, look to run that all the way back down to the previous lows. Failure to do either will just warrant consolidation. One thing to factor in is this does break out, make a small continuation pattern, start to rally up here, just targeting that previous low, creating a structural retest, only for the fact that you would be treating this entire ascending movement as liquidation and correctional relief for another continuation all the way back to the downside. The only way that you're going to see really strong bullish pushes is if we start breaking above that weekly resistance. Looking at pound dollar from the monthly time frame, you can first see its behavior, which starts as an impulse, then from there relief, and then we will see continuations of that impulse, and now we are in a state of liquidation. Now, if you do look at it from a more minuscule perspective, you can see within this ascending movement, we did just break the low, creating lower lows, hence momentum is now continuing in its current direction, which is bearish. Now, one thing to factor in is that this movement was quite impulsive, so some type of liquidation was to come about. The amount of liquidation that we're going to get is just going to be dependent on how hard the bulls can push. Now, one thing to factor in is that there is this potential head and shoulders pattern coming about with that 132, 83 being the neckline. Now, one thing to factor in from the daily time frame is this bullish push is going to warrant how big of a correctional relief we're going to be. And one thing to factor in is that there are two trends being formed here. That initial one gets capped off here, with that being consolidation, and then you see the second one here. Hence, this was the last high / low, so we do in fact need to see, and if you didn't get entries within here, you're going to want to see another break above that previous low / high. Small continuation, you could look to run that back to the tops. Now, that this is all treated as correctional relief simply for the fact that you could expect another downside play. Now, one thing you are expecting is a strong impulse up for any continued bullish momentum pullback, and once again, you're going to be battling with A though, B, and so you want to be quite careful with that. In reality, any real bullish movements are going to be back above this previous monthly resistance sitting at 137, 137,568. Now, one thing to factor is that if we do reject and we do start to break out, you are looking for short-term lower lows. You're looking around that straight to the downside. Looking at it from the 4-hour time frame perspective, you guys can see here that Right now, pound dollar is showing further continuation to the upside, simply creating structural retest on that previous high slash low that it broke. Once again, that is the impulse. This is correctional relief. So if it does in fact break these highs, you could expect potentially pushes all the way here, but that's going to form a reversal pattern. So if that starts to break out, that could be your potential sell, right? So if this does start to just continue, you could sell that, run that back to the downside short term again. Then from there, you could expect potential pending orders as you look left. And so this is going to be a dicey area to battle. You want to ideally see a clear break above, a small continuation, and run that back to the upside. Now, failure to do either, and if we start to warrant these as false breaks, what we're ideally going to want to see is a strong impulse to the downside, some type of pullback, and wherever it starts to create lower lows, again, start running into the downside, being this A1, A2, and A3 pattern, hopefully breaking the lows. Looking at AUD USD to start, we can see here that it is failing to break that monthly support, which actually turned to monthly resistance, but potentially could be warranted as false breaks. Once again, guys, a trend is not a straight line shot, but a consistence of highs and lows. Even though we broke that trend, we never in fact broke that low indefinitely, hence potentially warranting a false break. Looking at it from the weekly time frame, we can see that there were a lot of wick rejections here, in which once that the rejections start to hint deceleration exhaustion, we did see a bullish movement, and same thing is occurring as of right now. And so with that, since we did not create lower lows, you do still want to factor in that you are in a state of correctional relief because of that initial impulse. This is being treated as relief, and so it doesn't matter that this might pull back because the momentum is still to the downside. The only way is if we broke above that 7784. And then from there, you would just target the tops. Once again, all treated as short term simply for the fact that the entirety of the movement is downside, capped at the tops near here, with that being the ascending trend. But shorter time frame perspective does tell us that we should continue to the upside for a bit of time. It's a bit of a dicey situation right now because you are descending first, but you did break this high, creating short-term higher highs, completing that inverted head and shoulders pattern, and things of that nature. We are on a small pullback, so ideally you don't want to take the trade within here. You want to wait for the break of that descending trend line, small pullback, and then try to run it back to the weekly resistance. And then from there, give yourself a chance because this is all treated as liquidation again because of that initial impulse. Just mark the previous highs that warranted as lower highs in that descending trend. Looking at it from the 4-hour time frame, you guys do have a potential opportunity to take this trade if it does break out. But like I said, going to be warranted as short term, could create a double top and start crashing down if that starts to break out and that low right there. Now, if that does happen, that would be your sell bias right there, in which you just are waiting for that low to get broken, small pullback, and then start running it back to the trend. If that doesn't happen, guys, you might just be consolidated or range bound, and that might be something that you guys are interested in. And last but not least, looking at it, New Zealand dollar on the monthly time frame, same thing as AU. You do see that initial impulse to the downside. We are in a state of liquidation, even though we broke out of that ascending trend. That low never got broken, in which you do want to factor that in. That is the descending movement that caused this consolidation right here. And so longer time frame perspective, it's the bears game, but shorter time frame could be the bulls right now. So looking at from the weekly time frame, you are range bound. Once again, here's a clear picture for you guys. And so as of right now, guys, you do want to see what's going to happen within here. We did just state in the webinar previously that it took exactly 4 candles from the low before the big impulses. And so we did just see 4 candles right here occur. And so if this starts to take off back to this previous low that got broken, creating a structural retest, we will not be surprised why. Please take into consideration that this is in range bound after that initial impulse, in which any bullish movements to the upside, if we break out of the range, will be warranted short term. Treat it as relief because that could break back to the downside. But let's take a closer look at the 4-hour time frame to see where we could potentially move to. So as of right now, guys, we can see the end use formation and behavior after we broke that high. It starts with an impulse, followed by a pullback, another impulse, and then another pullback or relief. So what we want to see is an impulse above that daily and that consolidation. From there, we are going to want to see some type of liquidation, relief, and things like that. And then from there, if that does break out, you could expect a rally back to the weekly resistance. Once again, you would be creating a structural retest of that previous low, hence potentially incurring some selling orders or pending orders from the bear side, treating this whole movement as correctional relief simply for the fact that that could start to decelerate and start to leg back to the downside. Now, if that doesn't happen, then from there, you ideally are looking for this to pull back, potentially create a short-term flag. You could sell within there, but remember that's creating a head and shoulders pattern. So I'd wait for the low to break, some type of pullback, and that would be my sell, right? And then from there, I would try to run it back to the downside, hence creating this A1, this being the 2. And then this continuation would be the 3, back to the 1, and potentially breaking that 1 for warranting further continuation to the downside. And so with that, guys, that's the breakdown of all the dollar pairs for the next 24 to 72 hours. I hope you guys enjoyed that. And now we're going to be getting into the questions and answers. Right, guys, I am back. So let's get to these questions. I hope you guys enjoyed the webinar. That was a lot of talking at once, but hope you guys enjoyed that. Hope you guys liked it. Yeah, so let's see. I got Philly's question. Alex asks, does that means for Alex, what was your question, Legend? Do you have your mic? Is that muted? Is it here?
Yes, I'm here.
What's up, big man?
Yes, I was asking myself, like, the support and resistance zone, is it where the people place our stop loss and our take profit?
What do you mean, like where we could get a structural retest?
Yeah.
I mean, no, I mean, ideally, we're just expecting pending orders to be sitting there, only for the fact that, would you agree, Alex, that the bulls owned this area when it was ascending?
Yes.
So when it breaks, who owns it now?
The bears?
Okay. And remember, not everyone trades in the same style, right?
Yes.
Some people might trade on breakouts like us. Some people might trade on if-some entries, right?
Yes.
So what we know that what's going to be sitting here? Pending orders. We know that.
Okay.
Because when this pushed and dropped, right?
Yeah.
And then continued. Let's say, Legend, we were only here, right? Okay, I'm going to move it back. Don't worry. So we were only here. If we start to pull back, what are you going to expect?
More upside.
Okay, but you're going to expect what type of orders? Bullish or bearish?
Bullish.
Right. And so if you replay it, right, that's exactly what happens. We pull back, right? And then look, right? And it's the same concept. So if that's going to happen for us, if that was, now we're going to expect, okay, if that comes about, then we're going to expect some type of bearish pending orders there. Does that make sense?
Yes.
Does that answer your question, Legend?
Yes.
Okay. So it's not that you put your support, so your question though was, what was with the question about the take profit and stop loss?
I was asking myself if where the resistance, like we see your daily resistance, is that where some people place their stop loss or take profit?
I mean, it's possible. I mean, take profit for sure.
Yes, okay.
Stop loss though is tough to say, Alex, because ideally we're putting our stops above or below previous highs, right?
Yes.
But we don't know, where people might put their stops, because we don't know the ideal, what their R&R is, blah, blah, blah. But we could see, if you took a trade right here, right?
Yes.
You would put your stop definitely below here because this is the last low, right?
Yeah, for sure.
But the market makers know that, okay, everyone's going to put their stop there, right?
Yes.
So all they have to do is push price where?
More low than this.
So you just answered your own question, right?
Yeah. Okay, yes, I understand now.
You know what I mean? You know what I mean?
Yeah.
It's like you ideally know, because in the past, you know what I mean, that this was resistance. Okay, it broke. This was the high. We broke. That broke resistance. Now we're just creating pending orders here, right?
Yes.
But we also know that because look left.
Monthly.
Look
Okay.
Look right. At a monthly level, there's going to be serious orders there, right?
Yes.
Okay. Does that make sense, though?
Yeah, really.
Okay. Awesome.
Thanks a lot.
Always here for you, Alex. And then Theo, do you got a mic? Yes, no, maybe so. Fiji water, talking Aquafina glass, crystal clear, ice there. It's ice here, ice there. I just ice the atmosphere. Welcome now live. I think I know who that is. Come and popping his head in here. But Theo, if you don't want to unmute your mic, that's fine. I'll tell you what 1, 2, 3 pattern is. Theo, just work with me on the text, Legend. What's that? That's our impulse, right, Theo? Then that's our relief, right? That becomes our 2. 2 is our relief. And our goal is once we break out of the relief, where are we looking to target, Theo? What's our target? But we don't know if lower lows are going to be created. What do we know? That we have a low, right? And so the numbers just represent the types of movements. You have the first trend here, right? That trend is now, I mean, you'll see continuation of it, but it's not actual trend anymore. This is the new trend, which is your relief or your 2. And then the third movement becomes your 3, and your goal is to tag 1. You have a target now. 1, 2, 3, and your goal is to break that. And then notice how it forms again. Then you get your impulse, which is your 1, 2, right? And then your 3, back down to your 1. Your goal is to break that. And then when you're actually in your 3 actually turns into your 1 if you break the lows. Does that make sense, Theo? Because notice, when this was our 1, this was our 2, this is our 3. The 3 actually becomes the 1 because then that becomes the 2. Does that make sense, Legend? Or this would be consolidation, which would be your 2. No, it wouldn't be your 2 because it's a consolidation. But does that make sense? So watch this. Bang it out for me. Theo, what's this a number? That's our what? Then this becomes our, right? If we break out, that becomes our. And where are we targeting? Back to the lows of the 1. And if we break the 1, then what does the 3 turn into? Woo! Damn! That's what I'm talking about. Hold it down, Theo. I'm telling you right now. None of you guys know Theo's story, but we're going to be reading about him on the newspapers, I'm telling you, because he's got something special attributed to him. But we'll be reading about him on the newspaper. I just hope he doesn't forget about us because, I don't know, man. Theo's special because he's got an interesting scenario. But shout out to you, Theo. Keep kicking ass, legend. And so, guys, if you guys want to ask any questions, by all means, go right ahead and do so. I'm going to be on for another 5 minutes or so, but let me know. But 50 bands in the motor, 12 can't pull. No, such a good song. I know who that is. But the one thing, guys, that I honestly want to say in the end of the day is you know, I'm so proud of everyone, and I just want to say this for the guys that are here. And just listen to this real quick. What's the coolest thing about starting that FX Trader was working with a group of people over the past 18 months. And now seeing a lot of those individuals go full time. Like, I don't know if Raymond's still in here, but he was in here before. I remember when Raymond and I first joined up. Now he's going full time, and he actually lives in New Jersey, which is just a state over. We're gonna meet up. You know, just a lot of guys that I was working with when I first started are now full time, and that's so cool just to see the growth, the transition, and even some people who have taken my course and you know, they needed to be in their you know, own headspace and need to work on themselves. You know what I mean? The one thing that I tell all my students in the end of the day is, you know, I'm a huge advocate and you guys need to do whatever you guys need to do to get you to the level that you need to be at. Now, obviously, you know, in good thinking, but you know, if that means that you need to become quiet, you can't, you know, you don't need to speak to anyone or whatever it is. I don't care, right? As long as things are okay and you're happy and you're healthy and that's it, do what you need to do, right? And so, you know, I have a lot of students like that who just feel like, you know, sometimes being in environments of people is not suited for them, and then that's okay, you know? And so I just wanted to tell you guys this, is that, you know, all the people that are going full-time right now, they've been in the game over a year, if not more, right? And, you know, the reason why they can go full-time a lot quicker than I could have went full-time is because, you know, I was able to provide them with some experience that, you know, eliminated a lot of time and waste of capital that I had to go through. And so, you know, what I'm trying to say is crawl, walk, and then run. Don't try to run right off the bat because you're going to fall, promise you. But if you crawl, if you walk, and then you run, you're good to go. And so just wanted to say congratulations to all of you guys that are going full time and are really doing what you guys set out to do. You know, this game isn't tough anymore. It's just a puzzle. It's really it should not be tough. You know, if you guys just have a set approach. you know, what becomes tough is your own mental. You know, it just becomes you in the end of the day, is accepting you. And so, you know, like one good example is like we sent 2 trades on Sunday into Monday. They both hit. And then I want to signal, I think, UJ, and couldn't take it. And I wanted to. Because I thought UJ was really good. I felt like dollar pairs were in reverse. But sometimes, guys, are just trades are not there for, you know, there's it's not the right time. There's no point of pushing them. No point of rushing them. Just be very smart, being very patient, being very disciplined in your approach. And just keep that with you guys. And so, you know, I'm just one last thing I just want to say on this topic is if you guys approach trading like I can't wait how much money I'm going to make this week, you guys are not going to be successful. I'll tell you why. It's a job. It's a job, and not saying it's a job like a 9 to 5, but when you guys go to work, you guys do what you have to do, what you're responsible of doing, and then you guys get paid for it. See, people, they approach this game in a sense that they're doing what they're supposed to do and they'll get this big monetary compensation for it. But like, don't you guys want to get compensated for like 25 years? And so you guys have to look at it like, I have no idea how many pips I'm going to make this week. I have no idea what market environment's going to be this week. I have no idea what the catalysts are going to cause the pairs to move. All you guys know is how to avoid the hits. And so your goal is to A, first survive, and then B, if you guys can take a punch or two and you guys can obtain some pips, shout out to you because you guys are the 1% of the market. And like the 0.01% of the people that actually make money. You know what I mean? And then so if you guys go and you look at every single week of it's just a job and I have to take care of it. Or you guys look at it, it's like, you know what? It's a big freaking battle. And everyone is trying to shoot everyone. And all I got to do is go out there, take my correct shots, and retreat to base. That's it, right? That's how you got to look at it. It's a battlefield. Take your shots, come back to base, patch up, right? Refresh that mind, and go do it again the next week. Because I'm going to tell you guys right now, if you guys tell me you guys want to be full-time traders, then you better make sure that however your approach is to trading, it is sustainable for 10 years, 20 years, 30 years from a mental standpoint. And if it's not, and you find yourself, you know, worried about your trades, you find yourself truly emotionally invested in your trades, which you can be emotionally invested, but not have emotional feelings towards it, right? And so, and I know that's contradictory, but you know, it's basically in the end of the day, you know, you have to, you know, be very, very, you know, smart on not only your approach to trading, but your overall health on that. And so, you know, the way I look at it, guys, is if you're just a winner or you're a loser, you know what I mean? And so shout out to you guys. All you guys are just absolutely amazing. You guys mind blow me. To be honest, the honest reason why I just keep chugging along with that FX Trader is because of you guys. You guys just keep showing me how bad you guys want this and how dedicated you guys are. And it's really motivating for me. I can't tell you. I've developed passion out of this game ever since starting that FX Trader. It's undescribable. I can't talk about it. So, guys, I just wanted to say thank you so much all for coming onto the webinar. I really appreciate it. Once again, shout out to all the guys that went full-time. I remember when I went full-time, it was an interesting time. And so it was a lot of fun. Bit of an emotional roller coaster, but we got through it. And so we're here now. And so to all the new full-time traders, be smart, be patient, be disciplined, right? And then from there, guys, you know, just do what you guys were meant to do, you know. And so to all the students, live training is going to be maybe Thursday. We'll get Thursday out live training. This webinar will be recorded and will be uploaded to YouTube. If you guys are not familiar with my YouTube, it is at That FX Trader. Would greatly appreciate it if you guys subscribe, right? Trying to make a pretty big YouTube channel. That'd be cool. And then besides that, guys, thank you so much for coming out. Really appreciate it. Keep chugging along, keep striving, guys. And if you guys need anything, as always, I'm always there to help out. Send me a message on Instagram, Telegram, email, it doesn't matter. And so with that, guys, have a wonderful rest of the week. Wish you guys nothing but the best, and I will see you guys all in the next webinar. I'll see you guys soon.